It's time for tax survival strategies. And this is an exciting topic, and even more exciting because we have a big, beautiful bill that's been passed. We're going to talk about the biggest, beautifulest changes. But I'm just a real estate broker. I can't give tax or legal advice. Say that all the time. I'm going to bring in somebody who knows what the heck he's talking about for taxes. And that is Greg Taylor. Come on in, Greg.
Hello, hello.
The whole crowd's excited you're here.
All right.
So, Greg is with Taylor Tax Strategies. Where are you based, Greg? You're in the middle of the USA.
Yeah, I'm in Louisville, Kentucky.
You're a good man. So it's like 3 hours ahead of time there. He could be at happy hour, but instead he's hanging out with us. And you guys, so you got CPAs and IRS enrolled agents, and you've served 48 of the 50. I know you were states, that is. I know you were working on those other two. Did you get them yet or what?
we are. No, I still have a guy that has verbally committed from Alaska, but he has been slow to actually sign the paperwork and get started. He's got a lot going on. I think summertime in Alaska is actually a busy season for him because he has Airbnbs and things like that. So I imagine in the fall when it's all covered in snow again, he'll sign up.
When it goes back under the permafrost,
Exactly.
he'll reach out. Well, and that's actually a perfect segue because I know in the big beautiful tax bill that I guess there's some advantages potentially for Airbnb. But you know what? Let's get into it. So, big beautiful tax bill was passed. It was only like 1,500 pages, and we last time we got together. I mean, you've had time to read through it. So make sure that you give us all the good stuff. And then, of course, we got our audience so they can chime in and ask their questions. Michelle's in the background. She's going to keep things real, kick out anybody who's causing trouble, including me. If I start to cause trouble, she'll get rid of me. So you'll be on your own. But
I'll host by myself.
exactly. You don't need me. So let's dive in. Tell me what happened, because I know there's some exciting changes for the world of real estate, in particular, real estate investors in the big, beautiful bill. Lay it on me. Let's go. I'm excited.
Yeah, absolutely. There's a lot for real estate investors, especially, and even real estate professionals. So, one thing that I tell my real estate professional clients is, if you ever need me to convince your investors to buy more property, now is the time to get me in front of them because it is a very easy sell right now to
Hold on.
convince them to
Say
buy
that one
more.
more time. People, make sure you tune into what Greg just said. Is now a good time to buy investment properties, Greg?
Absolutely. Probably. Well, it's the best time that we've had in at least 3 or 4 years. So, and I think it's going to be permanently better than it has ever been. So
You
that
piqued
is a
my
very good thing.
interest. Don't hold out on me. Come on, tell me why.
Yeah. So with that bonus depreciation from these properties, you're just in a really good spot to be able to deduct a lot more of the purchase price up front. And if you go the Airbnb route, it doesn't even matter if you have a W-2. So if you're one of those people with a W-2, maybe you've worked with somebody, who has a W-2, they have a home and they're looking at a vacation home. They could potentially write off anywhere from 20 on the really low end to 45 to 50% of the purchase price on the really high end of a vacation rental right now. So it is a really good time to do that. And because of the way that short-term rentals are set up, they can write that off against their W-2 income. So it can actually decrease their W-2 income significantly right now. So
All right. So what we're gonna go through that again. You're gonna talk to me like I'm a 5-year-old. That's what I tell ChatGPT, and the same thing I tell my kids when they're trying to explain a meme to me. Talk to me
or,
like I'm
or the new math, right?
or yeah, the new math. Darn it! When I had it figured out, they asked me for help. I'm like, no, go talk to your brother. I can't do
Yeah.
this. So depreciation. Or I'm sorry. Depreciation. Let's just start there. What is depreciation on a property, and why is it a good thing now?
Yeah, so depreciation is actually really tricky because the government allows us to say that our properties, our real estate is going down in value every single year. If it's a residential rental, it's divided by 27 and a half years. Please don't ask me where they got half. I have no idea, but they have 27 and a half. And then if it is commercial, it is 39. Again, I don't know why they didn't go with 40, but it's the government, right? So they try to make it tricky sometimes. So depreciation is basically taking the expense of the purchase and dividing it up over that period of time so that you get those the deduction of the purchase over a certain period of years.
And it's on the improvements, so the buildings,
It's
correct?
on the building, yeah. So any land improvement. So basically, you're going to take the purchase price and then you're going to subtract the land, and then anything remaining is going to be what you're able to deduct.
So you're
So
going to take that. So let's just say we'll give it some numbers. Let's say it's $1 million property and the improvements are worth 400,000. So back to what you said originally, and it's going to be residential. So you have 27 and a half years to deduct $400,000 split up over 27 and a half years. You don't
correct.
deduct
That's
400,000
exactly right.
every year. So,
Exactly. Yeah, that'd be
all right.
really nice, right?
Yeah. So now what happens now that we have something special in the big, beautiful bill? What's the difference now?
Yeah, so with bonus depreciation, those improvements that you make after purchasing it potentially could be expensed all at once. So, an example would be if you bought appliances, if you were buying a short term or long term rental and you're replacing the stove or the dishwasher, those can be expensed through bonus depreciation. So, it's still a depreciation technically, but you get to take all of the expense in the first year. Um, Now, related to the whole property that you've purchased, that's where we get into my favorite that we mentioned earlier, cost segregation.
Cost
So
segregation. Greg is always talking about cost segregation
that
on
is
my
my
show.
favorite.
Yeah, I know. And I try to sweep it under the rug when you bring it up because I'm sick of hearing about it. But now it really actually matters.
It
So
definitely matters.
tell us, break it down. Talk to me like you're teaching me the latest TikTok meme. What is a cost segregation analysis?
Yeah, so with a cost segregation, it's a study that's done of your property. If it's done properly, it's done by an engineer and they're breaking up the purchase price into different items. So, for example, instead of saying I bought a house that I'm going to, or a commercial building that I'm going to depreciate over this period of time, you're saying I bought walls and windows and doors and floors, and on the list goes, right? Appliances, HVAC ductwork, electrical systems, all the things. And so by doing that, then there are a number of items, as I mentioned already, appliances that are 5 year items. Anything that's less than a 20-year item is going to be able to be expensed at 100% bonus depreciation. So
Wow.
effectively an expense. I keep saying expense, but technically it's still depreciation. It's just effectively on your return like an expense. So items that go into there, anything from like a shed that's in the backyard. A mailbox technically is less than 25 years. Most flooring are less than the 29, 27 and a half or 39. Most flooring, except for ceramic tile, falls into the lower periods. So you can expense that effectively. So there's a lot of things that you can expense. I've mentioned my parents before on this show, and I was talking with them today, and my mom was asking what's better tax wise, a fourplex or a 12plex, if they're the same price. And I said the 12plex all the way because there are 12 kitchens and 12 bathrooms, and that's where a lot of your bonus depreciation comes in, is from those two rooms. And so we have specialty plumbing and specialty electrical and the appliances, things like that. So definitely you want to make sure that you're considering all those things when you're looking at what you're ready to buy.
And that's so the cost segregation analysis. You've mentioned that you have, I mean, there's companies out there that do it, but you have one that you trust. Why is it that you trust your cost segregation analyst more than others? What should people be looking out for?
So I've Yeah, so I've had clients who have gone to other cost segregation specialists, and they've done a great job. There's not been any problems as long as it's a qualified engineered study. A lot of times, what I'll have happen at first is clients will come to me with this DIY study where they just put in some numbers on a website and paid $400, and then got a report, and nobody's defending that report. And so then what that means is if they get audited, they're going to expect me to defend it, but I didn't make the report, so I can't defend it either. And so what I really love about the people that I work with is they will defend their cost segregation study to the however long it takes. They don't have a limit on their defense. They'll defend it however long it takes to get whatever's done. From what I understand and what I've been told by them, there's only been one time where the IRS has called their cost segregation study into question, and the owner or director of the company wrote a letter to them, and the IRS wrote back and said, "Never mind." So
When does
that's
yeah,
worth quite a
when does
bit,
the
I think.
IRS
So
ever say never mind? They
yeah,
they're
yeah.
usually
So
sending
it's kind of like this is
yeah,
going
usually
away
they're
now.
sending more
So
people to knock on your
um,
door. No, that's amazing. That's
yeah, yeah. So
and my guess too is because of this change with the bonus depreciation, a lot more folks are going to be doing the cost segregation, and there's probably going to be more eyeballs looking for bogus cost segregation analysis. So you really, right now in particular, are going to want a pro for that.
absolutely. Yeah. You're going to want somebody that's going to defend it. And I'm the tax preparer and the strategist, not the cost segregation guy. So I will not be defending any cost segregation studies. That is not my role. So, but I really love it. It's a great strategy. If you're a real estate professional, it is the best way for you to not pay taxes. If you are a W-2 and you want to buy a short-term rental, I have a lot of clients who are not in real estate, and so they will look at other types of tax strategies. But buying that short-term rental, that vacation home, is going to save them much quicker and much more on a larger scale, than a lot of these other strategies that we would implement. It's just a big chunk taken out right away. So.
And all nighters here, by the way. Thanks for coming out, all nighter. He's been on a boat, so all nighter goes
Hey,
out into
hey.
the ocean catching salmon for several months. In fact, I think he was up by Alaska. All nighter, when you're there next time, try and get somebody to sign up with Greg because we need to get Alaska. But
I'll send you a referral fee if you do.
so all night, and he doesn't even give me referral fees. What the heck? All nighter. It says smoke the like button like Cheech and Chong. I appreciate that, all nighter. So let's
Yeah.
back up a little bit. So what you're saying, and you've mentioned W-2 income. So W-2 income would be somebody that's working for a boss of some sort, a company, and they're paid.
Right.
So most real estate agents were independent contractors, were 1099. So if we use the bonus depreciation, it'll basically offset our income. Is that what it does? Is that a good way to do it?
Um, yeah, so it'll offset your 1099 income. So as a real estate professional, it can just offset that other income that
That's
you have.
amazing. And same thing for the W-2. It can offset the income.
Well, for the W-2, it only is going to do that if you qualify for the short-term rental loophole, because as a W-2, it's very hard to be a W-2 and a real estate
Yeah,
professional unless you're in a real estate
got it.
field, just because of the requirements of how you become a real estate professional. So if you are a W-2 employee outside of a real estate field, then you would most likely, if you're looking to use real estate as a strategy, you would want to buy short-term rentals. If you're looking for investment and just to have the income from the rental to be tax free, then typically regular rental property, long term would be fine.
Okay. No, and that's an important distinction. To qualify for real estate professional, obviously you don't have all the qualifications at the top of your head, but just give me one example if you could. For
Yeah, so there's a bunch of different things that are listed. So if you're involved in the buying, selling, or building or improving of properties, then that qualifies you as a real estate professional. Most things that you would think of as kind of real estate professional are on the list. It's actually a pretty easy list to find. If you Google it on the IRS site, it's very detailed and very easy to read through that list. One thing that's curiously missing is mortgage
oh
lender,
yeah,
like a mortgage loan
yeah.
officer. And so that's always weird to me. I tell my clients that, some of them say, well, I still qualify. I'm a mortgage, I do real estate loans. So, and I don't have a problem with that as long as they know up front that it's not listed specifically. I think that that qualifies as well. But if they ever got challenged by the IRS, I would not have any way to defend it in an audit because it's not listed on there specifically.
That's an
So,
interesting point. I've seen that before. And the other irony in California, a loan officer needs to have a real estate license in addition to the NMLS license. So they actually have to be licensed to practice real estate. But like you said, they're not on the list. It's funny.
yeah. Yeah, I would definitely in California, that would make the argument even stronger that they are a
Yeah.
real estate professional if the
What
state is
about
requiring that license.
what about a YouTube channel that talks about real estate? Would that qualify for a real estate professional? And I'm only half jokingly
I
asking. I'm curious.
Yeah, no, I think that's a good question. I would say if you're spending over 750 hours working on real estate related education, I think that that makes sense. There is some variances there. I have a business coach that I work with, both as my coach and I do some of their tax strategy as well. But they asked me, most of their clients are real estate investors, and so they're coaching real estate people, and they were like, would that count? And that's kind of a gray area. Some of those things where you're kind of giving advice, like with the YouTube channel or whatever, but hopefully that YouTube person is also investing in real estate. And so this would just be part of their hours to make that 750 hours. So yeah, I think that that would be a big part of it. So
All nighter. I was asking for you too because you spend a lot of time talking about real estate. So I think
yeah.
all nighter's a real estate professional. So I'll I'll give it
So
if the
yeah,
IRS.
to answer, sorry, go ahead.
I was just gonna say if the IRS comes knocking, I got all nighters back on that one.
Yeah. All nighter on that one that you mentioned there about the W-2, it is 750 hours. It is very hard to say that you have a W-2 outside of real estate and are still spending 750 hours a year on real estate on top of your W-2. It's not impossible, but it would be around, I think it's around 75 or 80 hours a week that you would be working if you had a 40-hour W-2 and also the 750. So it puts you in a really high amount of hours. So
And you
yeah,
better
it
be
would just be hard.
making a lot of money for all those high hours because
Right, and it does have to be more than 50% of your working hours. That's the
got
other
it.
part of that. So there is both a percentage requirement and a number of hours.
But the short term rental loophole doesn't require this. So expound on the loophole.
Yeah, so short-term rental loophole is basically allowing people who are not real estate professionals to qualify for that if it is a short-term rental property. And so what you're actually doing is you're moving your short-term rental, which is, or your long-term rental, which is on Schedule E, you're moving it over to Schedule C, which is a short-term rental, and you're saying this isn't a rental property, it's a business. And so your Airbnb technically then becomes a business. And so then you fall into the business category. You're working on your business, and then all of those expenses, all of the income, everything goes onto the Schedule C as like a side hustle, basically. And then if you have a loss there, it can offset your other active income, which would be your W-2.
And that right there, everything you said caused my eyes to glaze over. And that's not you, that's me. I don't enjoy understanding tax advice. I enjoy understanding a lot of stuff. But the reason I'm saying this is that's why we hire you to help guide us through this because you love talking about this stuff and
Yeah,
figuring
that's
out
right.
which
It's
schedule.
like a game for me.
Yeah.
So
You
it's just figure out the rules and how to play them to my client's advantage. So
yeah,
as
you've
well as
said
my own, to be
before,
honest.
like you hate
So
it when people send money to the IRS.
I
You've
do.
said
I
that.
really do. Yep.
I mean,
I had a talk with one of my clients. I think I've shared this maybe on here before, but she came to me 4 years ago and prepaid 100,000 in taxes, estimated payments before coming to me. We had a big hit this year. It was almost 7 grand of that 100,000 we used up, and I was like, we got to get something going next year. I do not want to use all that up again. So we
I
had a little
remember
come
you
to
told that
Jesus meeting.
story.
She was in total agreement with me, but a thing that she was going to do just didn't happen by the end of the year last year, and so we weren't able to do it. But it's like we got to get on this better. But she's still trucking along with that money, just carrying it forward every year.
Yeah, I remember you said that she paid that, and you told her like get it back, but because she's a 1099 like me, sometimes it's nice to know you've got that forced savings account, so to speak, there. So
Yeah, and she said my goal is to just never have to send them money again. So
that's awesome. Um, All right, so let's continue and talk about some of the other fun things in the big beautiful bill. The salt cap was increased to 40,000. That's big for us out on the
yeah.
West Coast. So salt is state and local tax deduction. So tell me more about that.
Yeah, so basically it used to be that if you had these local taxes or state taxes, property taxes, those kind of things, they were only you could only deduct up to $10,000 worth of those things. However, with the this change, you can now deduct up to 40,000 of those things from your personal income. So it just allows you to deduct more of what you're already paying. There's a lot of things in our the standard deduction versus the itemized deductions, which is where you list like your mortgage interest and those type of things as well. There's a lot of things in there that just give you all these limits and kind of make it hard to get above the standard deduction. That's why with most of my clients, we just try to move to everything we can onto the business return and then take the standard deduction anyway. But some of that
Makes sense.
with the salt, for example, you can't always do. So
So expound on that. So you have your clients, they've got a personal tax return and a business tax return. So are they, what kind of corporation are they typically?
So that can be a partnership. It could be a sole proprietor and even move it to a Schedule C on your personal return. So it's not necessarily even a separate return, or it could be an S corp. And then there are different things that, depending on the way things are set up and what type of business they're set up as, where health insurance, for example, or your cell phone expense, or even if you have a home office, maybe part of the interest on your home or the insurance. Or the property taxes could be moved over to the business as a part of the part that's used as a home office is moved over to the business expenses.
It's, speaking of office, this is slightly dovetails into it. The Augusta rule. Bring that up again. Where you isn't that where you're able to lease the your house to yourself, or is that a different rule I'm thinking of?
Oh, the Augusta rule?
Yeah.
Yeah, so sorry, it cut out for a second there. The Augusta rule states that you're allowed to rent out your home up to 14 days per year for any purpose that you would like, and you do not have to claim that income on your taxes. And so, while that benefits everyone, because you could list it on Airbnb if there's a festival coming through your town, or I think I mentioned before Derby here in Louisville, Kentucky. A lot of people rent out their home here for Derby, but you can also rent it out to your business. And so then your business is paying rent and your business is paying getting a deduction for that rent payment, but you're not claiming it on your personal return.
That's awesome. It's fun now. All these pieces are coming together, but again, my eyes glaze over. So like I can't remember all this stuff. That's why you basically have to reach out to Greg and set up a consultation. So this is my dad, Dennis. He says, "I think Christian has spent more than 750 hours talking about real estate with All Nighter alone." That's true. We do talk a lot, and then another 750 with him. Yeah, he gets to hear all my horror stories. I need to share more horror stories. I've been dealing with a lot of horror stories lately, but then people won't buy real estate if they hear it all. So the
Yeah, you don't want
estate
to share those.
tax. Did you are you involved much with estate taxes and planning, or is that reserved for estate planners?
Yeah, that gets more into estate planning. A lot of that does. I do know that the amount did increase, but it that's really kind of where my limits are with estate taxes. So
If somebody wants to give a house to a kid, would you be involved in that, or would that be more the estate planner? Like everybody's still alive, not dead.
yeah, so a lot of that is going to still be in part of their estate because it's going to have to be acknowledged. Otherwise, it's going to have a gift tax on it. So it would
Yep.
actually reduce the amount of the estate that's able to be given before estate taxes come into play. So,
Yeah, our state planner or trust attorney, Kevin Snyder, who we have on occasionally, he described it as the with the $15 million state tax exemption, it's like a $15 million gift card, which I thought
Yeah,
was an interesting analogy. So you basically have $15 million each person to give to your family and kind of punch out some value off the gift card. So,
that's right.
all
Yeah.
right. So, anything else in the big beautiful bill that you think is worth bringing up, or I mean, are those the best things, or what? What are your thoughts?
So a couple other things that these are kind of more nuanced things, and you want to make sure that you actually qualify for them. So one is interest on vehicle loans, if they are made in America, is tax deductible. I'm still hearing some differences of opinions on what constitutes
Hmm.
made in America. I think the best rule is if it comes off the assembly line in America, then it's made in America. That's the best rule I've heard so far. And so you want to make sure, if that is important to you, that that interest be deducted, that you do put that you get a vehicle that came off the assembly line in America. However, if you're buying it for business purposes, it's a business expense anyway, and so you don't really need to get hung up on that if it's a business expense already, because the interest is going to be tax deductible as a business expense, so you don't need to deduct it on your personal return because it's already coming off on the
And
business.
then is there bonus?
Um,
Does the 100% bonus depreciation apply to a vehicle that you buy for work as well?
It does, as long as it's used at least 50% of the time for business. So, what you're going to do is you're going to take the purchase price and multiply it by the percentage of time used for business. And that's going to give you your depreciation expense that you're able to claim. So, I may have shared this before, but if you're looking to do that and you want to hit the 100% bonus depreciation, I strongly recommend buying a vehicle towards the end of the year, maybe even like December 28th or 29th, and then only using it for business the last 2 or 3 days of the year, so that you are able to say that it is 100% business use that
So
year very easily. So,
that's brilliant.
um,
Buy it on the 29th, drive it to the office, park it there, and then pick it up on the 1st. And it's been 100% business use. That's brilliant.
we bought our van the last year of bonus depreciation at 100%. We bought it on December
That is
28th.
genius.
So,
Although don't let the car salesman know,
yeah.
because you want to squeeze them too. They want to get their last deal of the
Yeah,
year. So
that's
don't let
right.
them know.
That's right.
You got to keep your
Yeah.
leverage.
Yeah, yeah, that's right.
Um,
So, but then going forward, you only have to keep it above
okay.
50% business use after that first year. So that's why it really works well if it's like a realtor who's also a mom or dad, and they have kids that they're taking different places and things like that, and they're going to be in the 60%, or 70% right now. If they bought it right now, it's a lot easier to get those 2 or 3 days in at 100%, and then the next year you just have to keep it above
No, that's
50%.
brilliant. That's worth the price of admission right here. So basically, what you're telling me, Greg, is I need to go buy some investment real estate. I need to buy some cars. You're spending all my money, Greg. What
Yeah,
yeah, all nighter loves
yeah.
the accountant jokes.
Yeah, that's very true. The other one I
Uh,
Yeah, the other one I wanna make sure to mention, just so that people are aware, this is one of those nuanced ones as well. A lot of you have probably heard this, the no taxes on tips and overtime, for those people who have tips or overtime. That actually only benefits the
mm,
employer. I'm sad to say. It does not actually benefit the employee at all. So basically, the taxes that are not incurred on that is the employer's side of Social Security and Medicare, but the employee side is still taxed. And you still have income tax on it as well. So that one, I really wish that they would have been more honest in the
yeah.
way they said that, because I think that was pretty deceptive. But generally, I think the bill has a lot of great things for business owners and individuals. I'm pretty happy with the bill overall as far as the benefits it provides. But that one has seemed to come out, a little more
That's
deceptive.
I appreciate your insight into that. Yeah, that's it's all in the packaging because nobody read all
Yep,
1,500 pages before they voted on it. They just read the headline. Um, so let's see.
that's
So
right.
I'm just running through a list of other things that are in there. So let's go back to the bonus depreciation for all of this stuff. So if you're the bonus depreciation applies for acquisitions after January 19th of 2025. So you basically, if you bought first week of January 2025, you're out. But
Yeah.
in other words, like if I bought a car two years ago, I'm not going to be able to qualify for the 100% depreciation, right? It has to be in something bought now.
Correct. It could be a 2-year-old car, but it needs to be
Yeah,
bought, in the year that
good
you
distinction.
did that. So hopefully you had already made a decision the year that you bought it, either about depreciation or or mileage. So depreciation is considered an actual expense. So hopefully you had already made your determination there back in the year that you bought it, whether you were doing actual expenses, including depreciation or
So
just
you can't do
mileage.
both. So there's a standard mileage deduction, which I think is like 67 cents a mile for this year or something. So you can't do
That's
depreciation
right.
and standard mileage deduction.
Correct, correct. Even though depreciation is literally not an
Yeah.
actual expense, it's considered an
Yeah.
actual expense. Um, so
Well,
so mileage is in theory supposed to account for everything that you would
that's good
typically
to know.
have.
So then you'd want
That's
to
kind of their best guess
track
rule.
your fuel expenses in addition to, if you're going to take the depreciation, you'd want to track if you're putting tires on it and oil changes, right?
That's right. Yeah, you would want to track each one of the things that you're putting on there, and make sure. And you're supposed to, when you buy a new car, you're supposed to decide on that vehicle what you're doing, for the life of that vehicle. So
Got
that's
it.
kind of how the determinations are made.
Okay. This is all good stuff. And just reminds me, I can't wait to sit down for our talk. I, I'm embarrassed I haven't signed up with you yet, Greg. I'm admitting that right now. I apologize I haven't. But
No worries.
especially after hearing about all this stuff in the big beautiful tax bill, like I'd be a dummy not to sit down with you and hire you. There's stuff in here now. Who knows how the heck we're going to pay for this thing in 5 or 10 years and budget and all that. But I mean, it's there. Take advantage of it
Hopefully the
now.
tariffs. That's the only thing I know.
Yeah,
Otherwise, I don't know how we're paying for it.
yeah. So the important thing. So when you do the 100% bonus depreciation on whether it's real estate or a car, you're done with your depreciation on that particular asset, right? You're not next year. You're not going to get any more.
If you had used it only a percentage of the time for business, and that percentage of the time increased, you would have some additional deduction potentially. So
Ooh,
there could be some potential additional that way, as if the amount increased. But
yeah.
generally, yes, because of bonus depreciation, it's going to be a one-time thing, especially if you follow my advice and buy it on December 28th or 29th.
Yeah,
So
yeah. You don't have much more time to do anything else. Then the other important thing, so now going back to real estate, is if you have a piece of investment real estate, and this applies whether you're doing the standard 27 and a half year depreciation schedule or 100% bonus depreciation, whatever schedule for depreciation, when you sell investment properties, you will have to recapture that depreciation, which means you're going to have to pay the IRS the depreciation back. And let me clarify, do you actually owe the full depreciation amount or do you owe tax on the depreciation amount?
that's right. So it's depreciation recapture. So basically, when you depreciate something on an accelerated schedule, you're telling the IRS it's already gone down in value this much. So then let's say you buy something, just easy numbers, for 100,000, and you're able to depreciate 50,000 of it, and then you sell it for 80. Well, you told the IRS that it had already gone down to a 50,000 value. So your difference there of the 80 to the 50 is 30,000, and that would be your depreciation recapture portion. And
Got
then you
it.
would pay taxes on that portion, or it would add to your profit, and then you would have to deal with it. Hopefully, if you're working with me, we would deal with it in a different way so that you weren't paying, unless you tricked me and sold it on December 29th, and then we'd probably be hosed. So don't sell late in the year, but do buy late in the year.
Buy late in the year, don't sell late in the year. How am
Yes.
I going to pay my bills if you're telling my clients not to sell their properties? No, I'm just kidding. You have to close when it makes sense. And that's why I always tell my clients, one of the first discussions you have is you're going to reach out to your CPA or your enrolled agent, your financial planner. your tax preparer, whoever the heck's doing your taxes, talk to them before we get your property listed or under contract, or when you're filling out the paperwork at the end. Make sure you know that what your potential tax bill is going to look like. So one way to avoid depreciation recapture that Greg just laid out is to do a 1031 exchange. So 1031 exchange, you don't recapture depreciation, and you don't get to reset the depreciation clock either. So it's not like you could do 100% bonus depreciation this year, sell it, buy something else, and get 100% bonus depreciation, unless the asset is worth more. So you sell it for 500,000, you buy for $1 million, you're going to get to depreciate in that scenario, correct?
Yeah, so you carry that depreciation forward instead of recapturing it, and then it's used whenever you sell outside of
Yeah,
the 1031.
that's
So
all, and that's all important stuff that you would help them calculate in the event that they're going to cash in their chips. You'd help them figure that out.
that's
Yeah.
right. Yeah, and I would probably encourage them if they don't want a 1031 that we look at buying a different property and do a cost segregation on it to at least wipe
Anytime
out
you
some of
can to
it.
drop
So
in cost segregation, you got a problem, my friend. You got a problem. We need to get you.
it's the
We need
best,
to get you
man.
a hat that says cost segregation. You can wear that on the show.
Tax strategy equals cost
Exactly. All
segregation.
right, all nighters chiming in. Oh wait, this is a multi one. I knew I shouldn't have even talked about the national debt.
Oh,
It's a
no, the national
liability
debt.
to us domestically, but an asset to the rest of the world, meaning other nations. They want our debt. So it's going to turn into a political show here if we're not careful. Foreign investors have different considerations and will fund this nation by buying our debt. Uh, this is all nighters' opinion on things, in my and George Gammon's opinion. Um, I have no opinion on this. This is outside my pay grade. I'll let you smart guys figure this out. All right. So what else? What else do we need to know? So what is it? It's August, and the tax. Most people don't have to file taxes for a little while, right? What's left? I mean, if you filed an extension, I guess you have to pay in October or what? Fill me in. What should we be doing?
September is partnerships and
Okay.
S corporations. October is C corporations and
Okay.
individual returns. So, unless you were in a state that had a natural disaster, like for example, Kentucky had floods and tornadoes, and so the whole state is not due till November 3rd, the return or the payments. So. The payments are not even considered late as well, including, and this is where some of my clients are actually keeping their money for quite a bit longer,
Oh,
payroll taxes.
interesting.
So if you do payroll in house and all your payroll taxes that you withheld from your employees, you can use those from whenever you withheld them till November 3rd and pay
Well,
them on November 3rd
and there's the
as
point.
long as,
Make sure November
yeah,
3rd you have the money and can pay it, because then you'll be in trouble.
that's
That's
right.
for people.
That's right.
And all nighter wants to clarify it's not politics, it's just macroeconomics. And you're right, all nighter. Unfortunately, everything's
Fair
been
enough.
politicized, science, math,
That's true.
uh, economics. So, anyway, so what should we be doing to prepare for next year? Because now that this has passed, the big, beautiful tax bill, a lot of this stuff is going to apply to 2025, and there shouldn't be any more big
That's right.
changes for 2026, 2027, right?
I mean, hopefully not, unless they start taking stuff away or something, but they just passed it, so I don't
Yeah.
really see that happening. I would say one really important thing for people to be doing in the next month is getting a good projection of where you're going to end on the year. We're getting late enough in the year that you should be able to see what you've done so far this year and then add on what you think is going to happen and have a good idea of what your profit is going to be for your business. And then once you've determined that, you can then determine what your tax bill is going to be. And then you can call somebody like me and say, hey, what do I do to make sure I don't have
Hmm.
this bill? And so you have those numbers, of what your profit's going to be. And then we can look at strategies that you can
Well,
implement
and
to help
even
with
more
those.
importantly, we hire you so that every month, at least once a month, we're talking, so that we're throughout the year, so that we are strategizing and planning for the
Right.
whole year. And I can ask you when to buy a new car and things like that. So,
Yeah, I do have sometimes where husbands or wives will try to wives typically are like, "Hey, should we buy a vacation home?" And husbands are like, "Should I buy a new truck?" And, it's very clear when those questions are leading and by who is asking them what's going
That's
on there, so,
yeah. Trust me.
um
When you told me that about the bonus depreciation, I've had my eye on the new Lexus GX, the 550. Those are nice, and I could be tooling around town for work in one of
yeah,
those, and then off roading. Although I said the
there
same
you
thing
go.
about my Jeep, and I never off road my Jeep. So um,
It does need to be over 6,000 pounds for the bonus
okay,
depreciation on
good
the
to know.
vehicle, the gross vehicle weight rating, so that's a good, tidbit to put
Yeah,
in
I
there as
remember
well, so
that went into effect for a while. Wasn't it 100% bonus, and it didn't matter how heavy the car was?
I don't know if there was ever that it didn't matter how heavy the car was. There was some different, ways that you could use 2 different bonuses and kinda get pretty high, but, there was still one of them. The Section 179 still had the
All
six
right, I
thousand
gotta go
pounds.
throw some concrete bags in the back of that thing. Make sure we hit the 6,000. No, it has to be printed on the door. All right. So, in order to schedule time with you and your team, what do we do? Where do we go? Let me pull up your website.
Yeah, so I think it's not showing, but there's actually a QR code on my background. I don't know if you can see my
Michelle, do you
whole
mind
screen,
switching?
but
She might
if
be able to switch it so we can see the whole background. That's me. Yeah, there you go, Michelle. Now switch.
there it
Perfect.
is.
It's
Okay, yep,
backward.
there we go. So, yeah, if you wanna scan that
Boom.
it is? There we
That's
go.
right.
Thank you, Michelle. Appreciate that. Um, so if you want to scan that, that will take you to our website and you can get some. We have some free tools there, some free giveaways and assessments. And then also it will give you the information to get to book a time with us to talk about it. So we also do on our website, Michelle's got that pulled up. Thank you. Right there where it says packages, you can actually see kind of our different products that we offer as far as how our services work. We do try to help the large business owner, with 3 or more companies. I think our largest client has 17
Wow.
LLC companies, different stuff going on. And then we have clients that are just getting started. So we have the startup there for them. And so it kind of goes
So
through the gamut there.
when would be a good time to hire you? Would a landlord with one property be good, or tell me when I can hire you?
Um, Potentially the real if you're planning to stay kind of right there, you may just want to do like a one-time strategy call or something. Probably don't need to do set up a monthly thing. But if you want to, we do have the startup package. It is less than $300. I'm not sure how much it is per month. It does include your tax prep for your business and your personal at the end of the year. But if you just have one rental, that might be pushing it as far as the cost benefit of that. Just because if you're a W-2 with one rental, there's probably not
Okay.
a lot we can do. If you're looking to get into the short-term rental game, then we can definitely save you more than we would bill you for the year for that.
No, and I
So
appreciate that honesty because a lot of people just say, "Oh no, we can help everybody." I appreciate that, and then they could definitely reach out if they are planning to grow their portfolio. You could give them some strategies from a tax standpoint to help them grow their portfolio.
absolutely, yeah, yeah. And we are also doing a every week or two, we're doing a free webinar on the big beautiful bill. So if any of this didn't hit with you all, you can go to our Facebook page and see those links for our webinar on the big beautiful bill and learn more about it. Ask your questions individually. So we do have time if you do for question. I have time for questions right now if anybody did have
Yeah,
any.
no, we can definitely stick around. We got all nighter here. His, he says it's his last comment on it. I doubt that. I know all nighter. Politics is just the theory and chat of human interaction. Economics is actual human interaction. I like that. I like that. Um, yeah, so we'll stick around another minute or two, see if anybody asks. What's great is you dove deep and you caught us up on this, and I appreciate that. And like I said, I'm embarrassed I haven't reached out for my appointment, but I will be because there's so much good stuff in here. It would be silly in this big, beautiful tax bill, it'd be silly not to do it and take advantage of it while it's here.
Yeah, happy to help. Yeah, it's a really It's been a really good bill. I honestly have not read all 1,500 pages, but I have got some different training and, the highlights and things like that. So, we are learning more, as kind of people
Yeah,
read
well,
the
when
whole
you have
thing.
time,
So,
it's not
and
until
publicize it.
people will
So,
start filing their 2025 taxes next year, so there's still more time. Because
right, right.
so we talked about
Yeah.
the extension and deadlines that you mentioned, and then the deadlines coming up, and that's all under the old tax code before this.
Yeah, for
Yeah.
2024 stuff. Yeah, that's on extension right now.
Yep.
So,
One of the things I'm
yeah.
hoping they add that didn't make it in, if I'm going to be greedy, is the an increase in the Section 121 limits, which is the sale of your personal residence, 250,000 if you're single, 500,000 if you're married and filing jointly. Those limits were set in 1997 and haven't been changed. So I was hoping to see an
Yeah.
increase in that. There's even some talk about eliminating a tax against equity. So basically, no matter how much equity you have, you don't pay any capital gains on that for your primary residence.
Yeah.
Those would be definitely change the game for real estate. So when is this bill kicking into effect?
Yeah.
All nighter asked.
Yeah, so all of it is in sometime in 25 as far as I am aware. There may be some random provision in there that's not or that's stepping up over the next couple years, but generally in 25. There are a couple nuances. Going back to the cost segregation thing again, the nuance with that is you had to buy it after January 20th and place it in service after January 20th. So that is one of the nuances with that. A lot of people under old depreciation rules, it was based on the date placed in service. It didn't matter when you bought it. But with this new thing, they kind of changed the wording, and most tax professionals are saying after January 20th or after is when it had to be purchased and placed in service in order to get the
Yeah, and it'll
100%.
be interesting too. With a new bill like this, there's still going to be IRS releasing guidance, is my guess, and then there's going to be some
That's
testing
right.
of the law in the court system, right? So,
Yep. Yeah, there always is. Yeah, there are when people are trying to make stretch those limits and stuff. So there's always going to be some of that.
all right. So we don't have any questions coming in. It is late where you are, Greg. The reason we don't have any questions is because you were so darn thorough on the general topics, and everybody's going to reach out to you on their personal finances to get things figured out. So
Absolutely.
thanks for being here. I really appreciate
Cool.
that. We'll have you back again soon, but we want to be cognizant of the deadlines there. We know you're going to be busy with filing taxes, and hopefully Alaska. We'll get you in Alaska.
Yeah. I appreciate that being a mission
It
for
is.
you.
I can't
Hopefully we
wait to
do.
announce it.
I can't wait either. I do have one guy who is there part
Yeah,
of the
that's
year.
close enough. If you
So,
get that guy, we'll give you partial
yeah.
credit. It'll be like 48.25 of the states. That we'll give you that. All right. Well, thanks for being here, Greg. Really
There we
appreciate your
go.
time.
Cool.
We'll talk again.